All right, hello. Welcome everybody. Good morning. We are at Friday, May 27, 2022. Coming into the Memorial Day weekend. Obviously the market will be closed on Monday, or at least be very, very low volume and then close early. So not really a trading day on Monday, right? And then we have just a heads up, I won't be here next week, so we will be closed all of next week, and then we'll be back the week after that. So this will be our last broadcast for a little bit here. So let's jump right back into it. I'm going to take a look here at yesterday to quickly review what happened, and then we'll get into this morning here. So let's jump back to the open. Market was, the expectation, remember, we talked about a multiple time frame bullish signal all the way back from the lows of, I believe, last week, or yeah, the lows of last week. We got a really nice multiple time frame signal, which we'll get into, and things were continuing to push. So we had a little bit of a bullish bias, and coming into the open, we pulled back right into the fast moving average, and this was about 2 or 3 minutes into the open. That was the first level I mentioned as being the most aggressive level you could try, and sure enough, it didn't even break by a tick, and that was it from there. It went from 39.94.50 all the way to the high of the day yesterday, which was 40.73. So we're talking about probably just about an 80 point push, give or take a few points there. And then this is where I got in here. As the market pushed and came up to test the high of the overnight session there, I'm pretty sure, yeah. So it came up to test the high of the overnight session. As we were pulling back, I told you that this would be a nice clean area to try long, and gave you the heads up a few minutes before we got down into there, and went ahead and took that myself. And once again, we came down basically no risk at all. And then from there, like I said, we went all the way to 40.73. So just about a 70 point push from there. And that was it. That's all you had to do. Long 2 or 3 minutes after the open, or long 7 minutes after the open. And then this thing just pushed and pushed, came right to our minor eye level at 40.42. And I'm a little disappointed I didn't just say, let's go ahead and try it short, because that would have been a great scalp right down to the fast moving average. And price came down again, like the textbook, came right into the 200 moving average at 32.50, broke it by less than 2 points, and then went ahead and held and continued to go and held the 200 again on the pullback. We got the push, and then look what happened here. There's a reason we have a shaded region between 39 and 42. There's a reason that we watch these levels. This was a critical point for the bulls to get through. You can see we came right to it, got a pullback, held the 200. Like, everything is just so textbook. It happens like day in, day out. Held the 200, came up, had trouble right at 42 again, pulled back, and then held the aggressive fast moving average. And then what happened? As price got above that critical area, it held it to the upside, and we bounced 2 times right in between, right in the middle of that zone, and then went ahead and tried to continue pushing into the end of the day there. And as you can see, didn't quite get up to our next level, which would have been 40.80, the minor eye level. Failed just in front of it, and then went sideways going into the end of the day there. So here we are on Friday morning. The market pulled back. Where did it bounce? 40.42 once again. And then we've come up, and now we're getting the breakthrough 40.80. Now notice in the overnight session here, when the market started pushing, let's see if we can get this set up here. Market started pushing off 40.42. We broke up through VWAP, pulled back, and basically held it on 2 tests. It wasn't a nice clean to the tick bounce, but for the most part, there's 59. Came to 56, got a 3 point peak below, and then came back up, and then we essentially held. And now you can see we're riding that fast moving average back up and pushing right through 40.80. Now there was some trouble to the tick at 40.80 here for just about 5, 6, 7 minutes here. Market came to 40.80, pulled back, held our KP and that high of the overnight session, and then came back up and tried getting through 40.80 for a little while there. And then eventually about 5, 6 minutes in, 7, 8 minutes in, it pushed up, pulled back, held 40.80, and is now trying to push higher. So that's where we are this morning. I do think that we could probably look at the fib leg of just the overnight session here. If things do pull back, there might be some relevance in there. So I'll draw that on there just so that we can be aware of that leg if price does end up pulling back here this morning. And of course, if the market continues to push higher, we're going to have to go ahead and redraw that fib leg. Again, this is a intraday fib leg. So let's go ahead and jump up. We'll go up to the daily and get a perspective from there, and then we'll start working our way down to our 60-minute chart to look at the specific levels this morning. Let me jump up, get my daily over here. And again, we have our multiple time frame bullish signal from the low of last week, I believe the low of Friday, yeah. And then from there, on Tuesday of this week, we told you there was another nice clear bullish divergence off the low of that candle. And of course, we emphasized the fact that we basically have a doji, and we also had that nice doji back on Friday of last week. And again, bullish divergences, bullish dojis, everything was pointing to an attempt by the bulls to get some type of breakout. And I told you first thing was first, a day or two ago, we have to get through the high of this week here that we made back on, I believe, Monday. And then once we get through there, the idea was an attempt by the bulls to come up and get through the high of last week. And where are we right now? We are just, let's see, the high of last week, 40.95, and the high we made in the overnight session, 40.87.25. So we're just about, 8 points away from testing the high of last week. And then from there, we've got other levels we're going to be pushing up into. So let's go ahead. Well, first thing I want to mention before we go down into the 60-minute chart is we're going to have a red dotted line right here. It basically, I probably should just color it the typical swing high, swing low. But I have that there because a while back, we came right into this level here. In fact, it was basically two tests, a nice clean double bottom and an attempt by the bulls again to break out. And now we're getting down appreciably below it to come back and test that level. So I think there might be some relevance there this morning as a potential resistance. And just for argument's sake, the reason I look at these swings is, here's a great example. Here was the swing just a few points below it that we pushed back up into. So let's take a look at this. Let me draw a line. This low was 40.94.50. So I'm going to draw a line, 40.94.50. If I can get it there. I'll just do this. 40.94.50. Wait a second here. Okay. I just want to show you. Just some teaching going on here. So back when we were selling off and the market started breaking lower, getting through all these lows back here, when the market started to get appreciably leave this area and start bouncing back up, our first major swing was right here, again at 40.94.50. What was the high of last week? Oh, look at that. We came right up to 40.95. We pushed 2 ticks into that major swing, and then look what happened. A major rejection to a new low for the year. So as we come back up, we're coming right back into that level. Because we already failed from it, not so sure that we're going to use it again so cleanly. But the next level that hasn't been tested is that double bottom major swing up here again at 41.29.50. So just be aware that's what that red line is there if we continue to push this morning. So let's get into all of our levels. 4 hour, I don't think there's really much to notice here. We're getting through 40.80 here, one of these smaller structure zones, and coming up to that next week, previous weekly high. So let's go into our 60-minute chart. The first thing I want to cover is obviously our major retracement leg. So we do have the low of last week, 38.07.50, pushing all the way up, and as of yesterday afternoon, we basically had this fib leg. 38.07.50 all the way to the high we made yesterday. And it gave you three retracement levels: 39.70, 175, the 50%, which is basically here at 39.40, right in our major eye level area, and then the 61.8 basically right to the next major eye level at 39.14.50. You guys should remember how relevant 14.50 and 45 have been for basically the whole last week and a half. But yeah, so that's what we have from there, but we are continuing to push. So I would argue we need to continue to draw this because this quote leg up is now pushing higher. So until we actually get a high like we got yesterday and things start to really pull back, I think arguably we need to continue to draw this to the highs. And so if you do that, the high of the overnight session being 40.87, get that on there, and the low of last week being 38.07.50. And so if you look at that, we've got 39.80 quarter as the 38 retracement. And remember, this level might change if the market continues to push this morning. So the three major levels that I'm going to draw on the chart right now might have to be updated, and they might have to shift a little bit higher here, or a lot a bit higher if the market continues to push. So that's the caveat to these levels. They might end up having to be updated. But I'm going to go ahead and throw them on. We'll get our template loaded for fib lines. And actually they're major fib lines because that's the major leg. So major fib lines, get it on there. And then we'll just go ahead and copy that through to the other two. So the 50% retrace, 39.47 quarter, basically our major eye level, right? So I'll go ahead and copy and paste that down to 47 quarter, just so it's there, reminding us that we have more confluence sitting right in the major eye level area, and then from there down into the 61.8, which happens to be magically our next major eye level at 39.14.50. It's just 39.14 quarter. So I don't even think we need a line there, but we'll go ahead and put it in there. 39.14 quarter. Major eye level is 39.14.50. Okay, so we've got that on there now. Again, this might continue to push, and we're going to have to update these levels. But for now, that's what I have on there. Get rid of that fib leg. And now let's talk about everything else. There is going to be our typical previous low, the previous daily low up to the high of the overnight session. So we're going to have a smaller fib leg in here that I think is relevant. But we'll talk about that on the 10-minute chart once we finish everything else up here. So outside of the smaller fib leg that I want to mention, what levels do we have here on the chart? We've got the high of yesterday, the orange power level, sitting right where we are right now. So obviously staying above there, right? You know the sentence that's going to come out of my mouth. If we can hold above these two levels and maybe even pull back and hold that magenta line to come back up, these are clues for us that the bulls are remaining strong in a very general sense. If we end up coming down and pulling back this morning, just be aware the orange power level sitting there at 40.61, and then we have the close of yesterday 10 points lower at 40.51, and then another 10 points lower is our 40.42 level that we've been watching for a very long time. And look what happened in the overnight session. We pulled right back to 40.42 and bounced off of it. In fact, we broke through by 3 ticks and got the bounce out. So don't ignore that level. It is the low of the overnight session. And I know there's a lot of levels here. So pulling back 40.61, 40.50, 75, and then that 40.42, which is again our low of the overnight session. So we've got those 3 local levels right there. And then if the market ends up breaking through the low of the overnight session here, we've got the push right down into the magenta line and our minor eye level at 40.23. 4004, our major eye level, which has been a very strong support and a very strong resistance for a few weeks now, would be that next level. And then from there, we're down into that first major retracement level, which again, I need to continue to emphasize might have to change or shift if the market continues to push this morning. So remember, you're going to have to zoom back out, draw that fib leg to new highs and then go ahead and update those levels. But for now, we have that level sitting there at 39.80. A little bit further from there is the low of yesterday. So again, just going from a very general sense here, if the market cannot hold above the high of yesterday, can't hold above the orange power level or the close of yesterday, and can't hold above the magenta line, these are all clues we're coming back to test the low of yesterday and potentially break lower. If we get through the low of yesterday, we're coming right into the 50% retracement of the whole push up here. That 50% retracement happens to coincide with the major eye level at 39.45, which again, despite all the chop, ended up working a charm all throughout the last week and a half. And then from there, if price doesn't hold above there, we're now back to our major eye level at 14.50. And remember, we have the 61.8 retracement right there at 39.14 quarter. Any further from there, and it's all the same levels that we've been talking about. 38.90s there, 38.45. This swing and this little pocket here that I had drawn for the last few days, still relevant. So if the market does come down and continue to aggressively sell off here, we might see some type of reaction at 38.50 to 38.48. 38.50 to 38.52. And so that's a shaded region we've been watching for a very long time, for over a week now, but price never came back. And I just want to also emphasize here, back a few days ago, remember we had our fib leg right here from the low at a Friday of last week up to the high here, and look what ended up happening. The market pulled back right to the 61.8 retracement of the leg and is now pushing, and we're almost right up to the 61.8 extension, again, for whatever that is worth. I also think it's interesting that the 27 extension, the ratio of that is sitting right off that major swing low we were watching as a potential resistance as the market pushed yesterday. So anyway, I kind of digress. Just an interesting observation there. What else can I say this morning? If we continue to push, we've already established all the levels that we have above us, and we've talked about them basically since, let me go back here, basically since we were up here on May 5th. Shit, I keep pulling back like that. So where am I? Zoom this out. So basically ever since this push up into here on May 17th, May 18th, and the major failure, we've already established all these levels up here that haven't been tested, right? We came right up to that 40.95 level, 94.50 swing low, and failed. We never came back up into these levels. So I'll quickly just mention them, but they're all the same things that we've been talking about for whatever it's been, 2, 3, 4, 5 weeks or whatever. So we've got the major swing right here at 40.99 quarter. Okay, that is this major swing back here that really hasn't been tested outside the fact that we failed just in front of it here for the breakdown to the lows of last week. So we've got that level there at 99 quarter. A little bit further, and let me see if I can get this oriented in a way that makes it clearer for you guys. So there's that swing, 99 quarter, and then we have our minor eye level at 08.50, and then the first major retracement level is going to be up here at 41.21. I'm sorry, 41.22 even. And again, these should already be levels that you know about, that you have on your chart, that you've heard for a few weeks now. So we've got 41.22. We've got that red dotted line I told you was the major swing that, remember, we failed from the first major swing. If I could zoom all the way back here, we failed from that major swing back on May, whatever, 15th or 16th. Now the next major swing is up here off that red dotted line. You can see it here. And again, it was basically a double bottom. So that's that red line we're looking at. And then from there, I think there's a little pocket that we want to be aware of. If price continues to push here, and I'll bring this back over. If price continues to push through that swing, there's a potential that somewhere around 41.36 to 41.42, we could see some trouble as well. And remember, we don't know what level's really going to work. Sometimes there's a confluence of 3 or 4 things at a level, and the price just goes right through, and then some random level we have on the chart, just some major swing or something, holds and it fails, or it holds from the upside and bounces. So we don't know which one's going to work, but we do need to be aware of each of these areas because there are things that are very relevant, right? So we've got those, and then 40, 36 to 42. If the market continues chugging through there, then again, it's just all the same crap we have up top. We have some minor levels, 82.50, 41.89, and then we're back to the major eye level at 4,200. And I don't have enough time, and it doesn't make sense to really talk about because we've already mentioned it, and the market's just about to open here. Got a little long-winded, but essentially that's the stuff we're looking at this morning. And like I said, we have the retracement of the previous daily low to the high we're making now in the overnight session. And those retracements sit here at 38.50, 40.20, 375, and 4,008 for whatever it's worth. So have a great day, guys. Have a great trading morning. Have a great weekend and a great week next week. We will see you all on Monday. Let me look at the calendar really quickly here. We will see you on Monday, June 6th. So we'll see you next month to all those watching out on YouTube.